In the energy quadrant, the crude oil free fall continues. WTI crude oil contracts here at the CME fell over 5% to fresh 15-month lows, getting down below 47.50 and not really getting off the mat for much of the day. Trade was very weak in the crude oil quadrant, and most of it on the news from Reuters that officials are saying that the Russian output has increased, their production has increased by 60,000 barrels a day as of last month, or as of this month, I should say, and that their production has reached 11.46 million barrels a day, which would be a record. It would make them the largest producer in the world by quite a bit. It's not confirmed yet. Again, it is by reports. But if that's the case, it's showing the same sort of pattern that we saw prior to the last production cut, where most of the major producers involved in the cut started ramping up production going into the cut, which again starts January 1st. Saudis are no exception to this. Saudi exports and productions are at seasonal highs for crude oil. So Brent leading the charge lower, but of course this hitting the WTI contract as that spread needs to be in place. So Saudi Arabia has exports at seasonal highs, part of it because they've got mild temperatures, so they've got lower crude oil burn, which allows them to have quite a bit more to export. So that's going to market as well. And then U.S. production, no stranger to increased levels, supposed to be at a record again. Shale crude production supposed to be at 8 million barrels a day when this month finishes. That would be a record for the shale patch specifically, and that would put the U.S. well above 10.5 million barrels a day. So a lot of supply going into these weaker prices and going into weakened demand estimates from OPEC, EIA, and the IEA, all three major analytical bodies saying that demand is going to fall as the economies of the globe start to slow.